This is David Patrick, Fitzstock Charts, a weekend market video analysis. Charts Away Sleep Week 2 for January 4, 2020. So we have a lot to cover. I'm not going to make it a super long video, but I'm going to fly through some things that I think are important. Number one is we just had our best year since we launched the service. All right. We've had really good year every year since 2013. Last year was crazy good. Well, there's going to be good years. There might be some bad years, and there might be some average years. Last year was an exceptional year. Don't rate yourself or rank yourself based on last year, whether you succeeded or failed. It's all about long term. What have you done since we launched the service? What have you done since you started trading? Did you make mistakes recently, and have you corrected them? Are you listening to the methodology of just simple rules of engagement based on market trend? Or are you becoming emotional and having a lot of opinions and listening to sentiment indicators, overbought indicators, and the naysayers and whatever? You have to get off social media and stop listening to opinions. Those do not pay you. They do affect your opinions and they create emotions. And that's how you make big mistakes investing. It's how it pushes you to the sidelines when you shouldn't be. And it allows you not to capitalize on these massive uptrends. We had 11 of them last year, and we're currently in a 15-day uptrend. And we'll look at those charts in a moment. So we came in, we were up 28 handles the first trading day of the year. At one point in Globex on Friday, early morning, we were down 50 handles from the highs. And then currently, I'm looking at the markets. It's almost 1 p.m. Eastern on Friday. We're only down 13 handles, which is nothing. So if you tried to interpret news on whether this is going to be a world war it's not your job to interpret FOMC minutes, which is coming out shortly, to interpret what's going on globally or economically. You're not smarter than the market. I've said that over and over again. We're going to ride the waves of the market, and we're going to be a computer or a robot and ignore everything besides simple price and price structure. Call those price structures rules of engagement. I scanned thousands of charts trying to give us an edge with simple rules of engagement based on market trend, but incorporating our historical chart pattern comparisons because we know price pattern repeats itself. So we're going to look at a historical chart pattern comparison that we've been looking at today, which is 1925 and 1927. I pound the table all the time. Stay long in the uptrends versus your stop, versus the lines in the sand. This market was a little bit tricky the first couple of days. I added on price strength confirmation. I came in on a gap down on Friday. I'm like, all right, I'm 135% long, and we were down 50 handles off the high. I think when we opened, we might have been down, I can't even remember, 35 handles or something like that. So as we started to rip, I'm like, you know what? Those shares I added, I don't really care if I scratch them. Scratch them means make no money on them. I'm more worried about the downside if we get knocked out of trend, being overly aggressive, leveraged long. And so I hedged those 20% spiders. I was already long 20 and I was up to 40%. So I doubled up. The shares that I doubled up on, I hedged. I capped them by selling some January calls above the market to buy and generated the premium to buy protection. So although I'm 135% long in the market, 20% of that is in the spiders, which is capped at really minuscule profits. More importantly, it's protected. All right. I don't know if I'll need those protections. What it did is it bought me some time to see how we were going to close on Friday and to see how the market reacted after the weekend and see if anything happened, globally over the weekend. And there's a lot of things that can happen. So I don't regret any of the decisions, whether it was adding or hedging. I'm still long from early in the uptrend with large positions on. And once again, I always say it's never about my trading. It's always about yours. If you're a swing trader, you're real simple. Your job is to open an email to see if we're in an uptrend, allocate long the stock market, which is the S&P 500, first. If it's 50%, if it's 75%, if it's 150%, whatever it is to meet your risk profile, get long the market first. That was one of the things I pounded the table on last year. Get long the index first. Then, as we get deeper into the trends, you can trade the stocks. Now, some people are already long with mutual funds or whatever in their 401ks and they're never going to sell. It is what it is, which is fine. So they're just trading their trading account. So if that's the case, you can use the ESFL regardless. You don't have to get right in the ETFs. But I trade all of my capital, all of it. This is my retirement account and every investment I have. And I do go to all cash sometimes. In fact, I went to all cash October last year before the market went down 15%. So during the uptrends, I like to be leveraged long, over 100% long the market to outperform. That's my risk profile. You need to find your unique individual risk profile. Okay, so we're going into the week before OPEX. What is that? OPEX is the monthly option expiration date, third Friday of every month. So we're going into that right now. So historically speaking, it's a trend that the market sees some sort of shallow pullback during this week. And I said early, I think I said Thursday, I said that pullback could be maybe 20 handles. And it might be from higher levels. So to me, I didn't think it would be a significant pullback. 20 handles is nothing. In fact, we saw a 50 handle pullback in Globex on Thursday night going into Friday. So 20 handles is nothing. I get that. But I'm not expecting some massive pullback the week before OPEX. If it ends up being more than 50 handles, it probably comes from a higher level first. So, and once again, it's not our job to predict exactly where price is going. It's our job to stay long in uptrends, allocate, to scale, add on price strength confirmation, and define our risk. That's our job. All right. So we have the week before OPEX coming up. Guess what? We also have non-farm payroll. Non-farm payroll is normally the first Friday of every month. Well, it's not this year, at least for January. So they push it to, I think it was the 10th. I think it's the 10th. Yeah. So we have non-farm payroll coming up on Friday, which is event risk. And then we have the week before OPEX. So if you think things were sloppy so far the first 2 days, think again, it's probably going to get even sloppier. Okay, so first of all, what do you do if you're all cash the market? That's the first question. And where do I think the market's going? We'll get to both those questions in a second. Our last year's numbers were 489 different trades we had off of our focus list. 7 no scales, 44 losers, 438 winners, 89%. Unheard of statistics. Well, I don't know that we'll ever be able to match that. It was crazy good. We've batted over 750 since we launched the service every year. And this year, I do think, throughout the year we will. Now, it might not be that way the first week or the second week or whatever. But as we get deeper in, I believe so far we've had 39 January contracts engaged. Obviously, they didn't engage these first 2 weeks, or first 2 days of the year. But with January, we start trading January contracts, the second week in December. So we have 39 January contracts that engage. The 7 no scales and 1 loser right now. So it's about, I think, a 79% win with our January contracts. Anything over 75, I'm crazy happy. So matching the 89 will be very difficult. We already have 10 January calls that have doubled. 3 of them have tripled. Actually, there's more than 3. 1, 2, 3, 4. This is 4. We have 314 triplers since we launched the service. And 1,179 different options have doubled since we launched the service back in 2013. So crazy good numbers. Once again, we're looking at these numbers to give us conviction that the methodology works. Not take the pom-poms out and cheer on how well we did, right? Because maybe some of us didn't do well. And once again, it's a new year, right? We're all starting from scratch. So this is going to start from scratch too. We're going to see how it goes. We're going to ride the markets up and down together, but we're going to basically do all the technical analysis based on price, which is what technical analysis is. It's not based on anything else. All right. So what is this right here? Historical chart pattern comparison all the way to the left, 1925. Right here, 1927, our current markets. This is the Dow Jones. What did I look for? We look for weekly structure first, and then daily. Breakouts came. And so 1925 here, we could be, I don't know, roughly in this zone where my cursor is right here. So it's possible that if this is, this actually makes the most sense if this would repeat itself, where you stayed in trend, broke new highs, and then came down and retested those Globex lows. And if they held, we could do a blast off. That is what I ideally would want to see. You never always get exactly what you want to see, but you can see the Dow here. What I want to see is us close above the TSLA early next week, break new highs, because the bears are trapped. You got to remember, in Globex, we were down here. It was ugly. So the bears are trapped, and let's go to new highs, and then maybe retest those the week before OPEX, which would make total sense. That's what I want to happen. I'm not going to forecast it. I'm not going to predict it. If that happens, that's great. That means that historical chart pattern comparison worked for us again. This was also 1927, which was bullish, and we broke, looks like we got up here. We failed at new high, and then broke trend only to rip higher. Both of them are suggesting even if we break trend, then we're going higher. It's crazy. We're walking into Friday morning down 35 handles, and nothing's really changed technically. So what else did I want to talk about? Okay, so I said, well, what if you came into the service brand new, or maybe you're just all cash, because whatever it is that your reason is. What would you do if you're all cash right here? That's a great question, because we know that we want to get in early in uptrends, and we know the uptrend started here, right? We know this uptrend started here. Getting in early helps, right? Uptrend starts here. Uptrend starts here, right? Then we got a 44-day uptrend, think back in here, right? So we had more uptrends, but I'm just saying it's good to get in early. So if you're coming in the service and we're on a 15-day uptrend, already seeing volatility, and you got now event risk all over the map, what do you do? Well, that's a great question. I'm not a financial advisor. I'm a technician, and I'm a trader. So I can't tell you what to do. If I was in all cash, I probably would, be trading 5-minute rules of engagement, which is our rules, price above the 10 SMA with MACD in the right corner of price, take a trade. We use that 5-minute charts, which we'll get to. That's the first thing I do, because this market is giving, it's like low-lying fruit every single day. This market's giving 10, 20 handle rips or, destruction. So to me, that's the easy money right now. The harder money is chasing an uptrend, which is actually what I did on Thursday, right? I added on price strength confirmation. So if you're all cash, it's a very tough thing to do right here. I would say if that's the case, you use the ESFL and you allocate accordingly. Small positions at a time, maybe 5% to each position. That's what I would do. And I would day trade on top of that. So what was the other question? I think there was another question. I can't remember what it was. Let's first look at the 5-minute rules of engagement here. So for those of you that don't know, I hope my microphone wasn't close to me. I hope that you guys were able to hear me. We use our methodology based on daily for swing trading, but when we pull up a 5-minute chart, you can use the same methodology on a smaller time frame, 5 minute. You can just dissect the charts with uptrends and downtrends. And do they all work? No. I'm obviously pointing out the ones that did, but when they do, and specifically if you trade them, I'd say between 8 a.m. and 9 a.m. Eastern in the morning, these are nice. This is a bull flag above a downtrend line. We see this in the daily all the time, right? And right there, if you're long from 32.15, you're up 30 handles. 30 handles is what, $1,500 per contract. That's a lot of money for just one contract. Let's just say you had one on, right? I advise whether you're trading options or futures to have 4 minimum, so you would have scaled and held one. So your runner would be up 1,500, just your runner. So I was opportunity here, and this was shortly after the open. you could say this was a bull flag, and then there was another opportunity here or even here. So there's a lot of ROE, rules of engagement long, on 5-minute charts. And that paid very nice. So once again, if I came in cash, that's what I'd be doing. I'd be day trading this. I'd be taking ESFL. And I'd be allocating maybe with some spider calls going out to February, just to get long the stock market and or longing spiders, selling some covered calls. There's a lot of different ways you can do it. Once again, I'm not an advisor anymore. I don't want to get into that, but that's what I would be doing if I was all cash. I am not all cash, as you know. I'm already in the market. So I'm basically day trading 5-minute rules of engagement, and I'm looking at my trading account. If we ever do break trend, I'll probably start trading some stock options in my trading account too, on top of my leveraged long swing accounts, which is my investment and my retirement and my other accounts. Once again, SPXL or TQQQ or UDAO, these are triple longs ETFs. So it gives you triple longs. So if you allocate 40% of your capital, 40 times 3, because it's triple long, is 120% long market exposure. So you can be leveraged long without being on margin. All right, I know I'm talking about so many things here, and I don't want this video to be too long because really nothing's changed. Okay, so let's get to the markets here. So there's our uptrend. So we're above the 10 simple moving average, which is the green, so we're still in an uptrend. MACD is flat, still bullish, heading up, and it's still, hasn't crossed down yet, so that looks fine. When we look at the higher time frame, what does the higher time frame tell us? We are, oops, I got a lot of drawings here. Let me clear them. Clear. Clear. And let me blow it up. Cursor is very slow right now. What do we have here? So we didn't even get knocked out of trend here. So basically we've been in an uptrend since September 2nd on the weekly. So you're going to have all these guys on Twitter, social media here and there. This market's overbought, sentiment's too bullish, this and that. It's not how you trade. You always go higher. You can always go higher. And most of the time you do when people start talking like that. Bottom line is, we're in a weekly uptrend since September 2nd. We have MACD, by the way, at almost all-time highs. Almost. So the charts are bullish. Right, so let's get to what our stops are and what our line of sands are. All right, so we talked about obviously if you would ever break this on the SPX, that would be very, very, very bearish. That's the 200-day moving average. That's a pivotal low, and that's when you start really shorting. 28.55, right? This was the old breakout right here, and obviously you don't want to start carving back into an old breakout. It negates this whole move. So, this low right here was 3,023. You don't want to break that, right? Let's see here. 3023. See, this line right here, we talked about, this is when you actually would be bearish. Right here is when you just basically make sure you're not long anymore because it's going to get sloppy. This is a pivotal low right here created. This is 3,070, right? 3,070. That is an area you don't want to break, and that's probably an area, if me, once again, everyone's different. Some people are long the market from way down here, okay? My last entry is up in here. I can't remember. Up in here, something like that. You have, by the way, it's all my positions I post on Twitter, and I also are on my daily update via email you get. So 3,070, yeah, if we would break that, there's no way, I can't imagine I would still be long. We'd be below the 50. We would be below pivotal breakout after the breakout lows. Yeah, that just doesn't make any sense. So this is the next area right here, this 3126. Yeah. To me, 3126 is probably going to be below this rising 50 SMA. And yeah, I don't think I would wait till 3070. 31, what do you say, 3126? Let's write that down, make sure we 3126. So that's the last one I'm going to write. These are our lines in the sand, 3126. So when you come into a day like Friday and you see, oh my gosh, I'm not going to talk about what happened, but you can read the news, Google the news, because I'm not a news guy. And you just see futures down and you don't know what to do. You should know what to do, right? You should already be allocated accordingly in your uptrend. If you want to hedge some of it, you hedge some of it. But you already know what your long versus. You already know, just like when you take a stock off the ESFL, it lists the stop. You already know where your stop is. If you don't want to use a swing stop and you're a hybrid trader like myself, use the previous day's low from when you enter as your stop. No and ifs or buts. If you're day trading, it's that low of the day, right? So you have three different types of traders: day trader, swing trader, hybrid trader. So don't switch, don't flip-flop. That's how you're going to create a lot of trouble for yourself. Okay, so with that said, I'm long. I'm staying long. I'm long Apple. I'm long SPSL. I'm long spiders. I've hedged 20% of my spiders. I'm 135% long market exposure. And we have some wood to chop here, right? This is the SPX. Still haven't filled this gap, and we have a gap down here. So they can fill these gaps, and it's not going to stop me out. It's possible if we break trend, I might hedge some of it. But I'm not really going all cash until probably that break. And by the way, if that breaks, I will go all cash, right? So we know what we are long versus. So if you come in all cash and we're at, what are we right now? What is this? Let's just call it 30, what is it? 32.40? Is that what we're trading at? Oh, let's say close. 34 or 32.44. Is that what it is? Let me write that down. 32.44. All right, so you come in all cash, we're at 32.44. You know, according to, if you're me, what you're trading long versus. Gosh, I got to get this thing off here. It slows my cursor down. And let's see here. We got our finger in up here. So if you're at 32.44 minus 3126, you're risking 118 handles minus 3244, right? 3.6%. If you're long SPXL, you're risking 10% basically. If you're long spiders, you're risking 3.6%. Now, where do I think this market could go this year? I think this market can go a lot higher. I think it's going to be a bumpy ride, but I think it can go a lot higher. And I'm not a perma-bull. I've talked about 2008 was my best year trading. But I do think, according to technical analysis, historical chart pattern comparisons, this market can easily go to 3,400, if not much higher this year. So if there's, at least 4% upside and you get 3.6% downside, so reward or risk is similar. Now, if we get to a 3,400 minus 32.44 divided by 32.44, 4.8. You got 4.8% upside to 3 point whatever downside. Normally, you want 1.5 or 2 to 1 reward risk. You don't quite have that. So once again, you might have to adjust your positioning based on that alone. I'm not. I'm staying leveraged long versus my stops. That's me. I'm risky. You have to identify your risk profile. I say it all the time. This is your stop if you're new and you're coming in here. That's your stop. Don't let it get worse than that, and don't panic out in here. Maybe sell some cover calls or hedge with some puts against it if we would break trend. All right. I wouldn't even look to do that unless you would break, this is what, Tuesday's low. So let's talk about Tuesday's lows. That's 32.12. I think the problem with hedging a lot of your portfolio at 32.12 is I think if we get down there, there's a very good chance we get whipped right back up. So anyway, if you want 32.12, you can start hedging. You're going cash here. 3,070 would be ugly, and 3,023 would probably start looking to short this market. So we have a plan. We have a backup plan. Now, let's fly through things and see what they look like here. Nasdaq looks phenomenal. It was up massive on Thursday, and then we gave a lot back, but we're creeping right back up, and this thing looks phenomenal. There's a ton of Nasdaq stocks that look really good. So let's fly through the rest of it. We got, what's oil futures doing? Well, they're going through the roof. What's XLE doing? Nothing. Once again, I was talking about, people were talking about energy might be 2020. I don't know. I do know what we want to see. Let's clear this thing out. What we want to see, clear drawing set, come on, is the 50 right here, the blue, is going this way. And the 200 going sideways or up. This golden cross is what we want to see. We would like to see price come up here and bull flag above. Then it's an easier trade. Then you're talking about maybe an 8 star ROE. People new to the service, you can go to subscribers and see rate your trade or grade your trade. That's when we talk about a star system. The more stars, the higher probability. You can see that on the website. But anyway, yeah, we're going to get to those cannabis stocks in a moment, which just seem to lag. And I said if they move, it's going to take some time. And just like energy, it's going to take time. All right, let's see. XLF. They look phenomenal. They don't look phenomenal for an ad. We want momentum heading up like here and here. That's not what momentum's doing. So I still think you could stay long these. To me, technology. Nasdaq. To me, that's what it's showing so far. IWM lagging, got knocked out of trend. No, I don't love that. I do like these industrials. I like them a lot, actually. And I think the industrials could have a phenomenal year. I wouldn't mind having some exposure, and I might. I might wait for us to get knocked out of trend first, because I'm already leveraged long. And maybe then I put some diamonds on or maybe get some QQQ calls when we finally get knocked out of trend. I don't see that necessarily happening anytime soon, especially with this massive rebound we're seeing. And I'm speaking before the cart before the horse here, because it's not 2 p.m. and we don't know what the Fed's going to say. And we could give all these, I don't want to say them gains, but gains off the recent lows or Globex lows. We can give those back pretty fast. All right, IBB. What's IBB doing? Yeah, broke trend, lagging. That was the one losing January contract I believe we have. It was Guild. I believe that one got stopped out. And then I think we have one that we haven't been able to scale. So that one's been lagging for the last 4 days. So we have to stay a little cautious there. What's Bombs doing? Well, they've been in this trading range since I painted this picture since September. So they're still in a trading range. They look really good, actually. But they don't look good like they did back here. It's a tough new trade. Gold was a trade. We got long gold. We got long, what was it? Royal Gold, PAAS, and GLD, I believe. We got long all these. They all paid fat, and gold does look very good. I would be very careful chasing gold up here. It's a tough new trade if you didn't put them on. Okay, so I think we looked at all the indexes. Yep, so let's look at Apple. Yeah, this is 11 different entries last year on Apple that doubled. And these are up close to 200%. I haven't updated it. This is up, I think, 180. The goal was 300. We hit 300. Does that mean the party's over? No, it just means now the reward risk is not as compelling. To add up here is very difficult. That doesn't mean it can't go to 350, 400, or 500, because it probably will. It just means we probably have to wait for this stock to reset. What does reset mean? Get knocked out of trend and reset up. It always does it. It might not happen in the next couple of weeks, but it will happen. And at this point, to add Apple, you have to wait. In my opinion, you have to wait for it to reset. And we will be patient with that one. Amazon, though, looks pretty good. This is like elongated bull flag starting to happen. Moving averages, all three of them are starting to move up. MACD is at multi-month highs. So that actually looks pretty good. Netflix is sloppy. There's not much to be said there. Booking looks really good. This thing looks like it wants new highs. I like Booking. And I said Tesla back in here. I said this, we had a historical chart pattern comparison of Tesla. It was at 340, and I said this one could go to 500. Just looks like the exact same setup as we saw with Apple. And here we are, 454. 120 points later. I mean, that's, what is that, 40% since we, crazy returns. Now, even when it got knocked out of trend here, I was in disbelief. I thought the buyers would come in. They did come in, and we're at crazy highs here. So just like Apple, I would not add to Tesla here. It doesn't mean it's not going to 500, because I do think it's going to 500. It just means it's not compelling the reward to risk to add that one up there, even though I like it. You should already be long it. It was been on the ESFL a zillion times. What's Google doing? Looks very good. I would add to this one. This is not overbought or overextended. It is a nice price pattern that is extremely bullish, and I like it. It probably will be on the ESFL. NVIDIA, I like it. MACD's not heading in the right direction, so it probably won't. Intel looks pretty good. AMD looks absolutely phenomenal. Probably will be on the ESFL to add along with Google. AMD and Google look very good. Micron looks okay. It's lost a little bit of momentum. Avgo, OLED, Xilinx. What about Texas Instruments? Yeah. So AMD, Google, so far of all the stocks we scanned, look the best in Amazon for new setups. Those probably all three are going to be on the ESFL, assuming we don't get destroyed here at the end of the day after the Fed meeting. Microsoft, yes, it's a core. This thing looks higher. It's more of a grind than a thrust. Looks good. Oracle, not so much. Adobe looks pretty good. MACD's heading in the wrong direction. It's a tough add. Coop looks phenomenal. That should be on the ESFL. That's the fourth stock. Now looks really good. Another one. And so does CRM. So it's like, what, 7. Workday looks pretty good, actually. Team improving. Snap looks good. I think we already engaged in that one. It paid. Twitter rolling back over. Expedia looks okay. Let's see, we flew through all those. What about Roku? Well, just like I did with TLT and gold, it's in this gray area that if you're going to day trade it using 5-minute rolls of engagement, that's fine. If you're putting on a new swing position here, you're guessing. It's sandwiched between moving averages and you don't have an edge other than you love the products and you love the company and you're just buying and holding. That's fine. That's not trading with technical analysis, though, or rules of engagement. So is it a new setup? No. Wix looks pretty good. If it didn't have that 200 SMA, that would definitely be on. GoDaddy, not so much. What about Baba? Baba looks okay. Baidu looks pretty good. It's a bull flag. I believe that one is on the ESFL, along with this one, which I believe engagement looks really good. NTES, yeah, those candles are crazy. I probably won't be on. Cyber looks okay and setting up. Palo Alto looks okay, but it's coming into that gap, which is going to be slow. Vive, VMW, not so much. We probably got 8 stocks so far. Momo, well, that looks all right. Box, no. Did we look at Square? No. Square, not so much. Let's fly to the banks. JP Morgan, Citigroup, Bank of America. I think they all look fine. Some are in trend, some are out of trend. I've already talked about, I don't like them to add. Visa and MasterCard, if you're going to add probably those are more grinding than anything, though. So it's just, I would rather get them from lower levels and let them reset up. PayPal's a grind too. BlackRock, CME. CME is interesting. This is a break of a downtrend line. MACD's bulls. This is actually setting up long. So that might be on ESFL. ICE, same thing. And CBOE. So the exchange stocks, which have been sleeping for a while, actually look pretty good. COP, that's a nasty red candle I wouldn't touch up here. PSX rolling over, and that was a big winner from last year. Exxon, CVX. I think we had RIG on the ESFL. I think that might have paid. I'm not sure. I got to double check. That one still looks fine. Schlumberger, Halliburton. We talked about Halliburton bottoming process in here. 10 above the 50, bull flag, another bull flag, another bull flag. Problem is this price strength confirmation is coming without MACD, and we haven't even seen the golden cross yet, so I would not add to Halliburton up there. What about casinos? Las Vegas Sands looks good. Win. MGM. I don't think they look like ads, though. They don't look like ads. Weak sector here. Amgen rolling over a little bit. Guild got stopped. Jazz. That's in a downtrend. Does not look good. Vertex rolling over. ISRG. Aluminum. Yeah. RGN. None of this stuff looks any good to me. CMG would probably be the 9th stock to be on the focus for this coming week. That one looks very, very, very bullish. So we both of those. Let's see. UI, not so much. DBX. We look at Twillo. Twillo. As ugly as this Twillo looked in here, you got to get rid of your opinion. This one's actually starting to look much better technically and might start to see a short squeeze. Okay, we talked about this was a buy on all the videos above here. If you bought it, you got paid fat, and now you wait for it to reset up. It's coming, staying above the 10 SMA, then maybe it does, another leg back higher. For right now, just hold it. Hold your runner. Work looks interesting, extremely slow. It's hard to put that on the ESFL when I see so many other stocks that look so much better, but that one looks fine. Uber and Lyft, what are they doing? Yeah, this is improving. Uber actually, even though it might not be a 10 or 9 or 8 star pick, I think setting up. I think it's setting up to come up here to 34. So we might have that on there. Lyft, not so much. So Uber is taking over. Lyft was stronger than Uber. Now Uber is stronger than Lyft. So let's get to the Tilray, the Chronoses, the ACB, and the CGC. CGC seems to be the strongest out of all of them. Does not want to cooperate with technical analysis and rules of engagement, does it? Doesn't have a 10 star, probably has a 4 or 5, at most 6 star. 10 is above the 50. 200 is declining. 50 is flat. 10 is flat. MACD's flat. It wants to break above here. It hasn't done it. And I personally think, what do I think of this price pattern? I think it's bullish. It's not bullish like Apple bullish or bullish like Tesla bullish. It's bullish like this is going to take 2, 3, 4, 5 weeks to pan out type of bullish. I don't have the patience for that. I think it could chop around. I still think it could get to 25. If it does get up there, and for some reason you're long this name, you scale 3/4 and you put your stop probably at your entry. That's real simple. If it doesn't get there and you're long this name for some reason, it's not in the ESFL, by the way, your stop is right there. So this is not something I really want to spend a lot of time on. It's a bottoming process of taking infinity and beyond to take place. So we don't have infinity, so we're going to look things that are going to pay us sooner. With that said, let's talk about some closing notes here. We have our lines in the sand. We're in an uptrend, at least as of 1:20 on Friday afternoon Eastern time. We're in a second trading week of the service. We're going into our second trading week. So this is week 2, charts way sleep. I want to put last year behind us. I know we're still going to look at the 90% club and talk about it was a great year. But you're only as good as your last at bat. I understand our last at bat was last year, but we're in a new year. We're all back to zero. We're back to 0% gains, zero P&L for the most part. You might have some small ones first couple of days, but so we got to figure out what we're going to do this year. Last year's done. All right. I don't really care about last year anymore. I like the price structure. I did not love the way futures acted, obviously, on Thursday and Friday in Globex. If we revisit those lows, obviously that's concerning, or if to reevaluate where the markets are headed. If we close above the 10 SMA and the Fed doesn't knock us out of trend the second half from 2 p.m. on the Friday, I think we're going to go still take out highs. I think we're going to, maybe go, let's just guesstimate 3270, maybe 12 handles higher. And then it's possible, and don't rule it out or don't necessarily say it has to happen. Then test those Globex lows, because it's the week before OBEX, where the market often pulls back, and the non-farm payroll would make every sense in the world for that to happen. So A, I'm not predicting higher, right? I think we're going higher. B, I'm not predicting we're going lower after we go higher. I'm just saying it would make sense. You know what I'm doing. I'm staying long. I had hedged 20%. I show the 5-minute rules of engagement. I scan thousands of charts weekly, trying to give the best setups for us. So our focus list is what you're looking at. We're in an uptrend. We're having a good year for the most part. Expect things to be sloppy, but also expect to get paid using our methodology over the long term, not necessarily the short term, in a couple days or even a couple weeks. We don't know. So we have a plan. We have a backup plan. That's all I have for Charts Way Sleep Week 2 Weekend Stock Market Video Analysis. I will see you on Monday.